IAS 12 income taxes again. This is part 2 of 2. So under the current tax section, we only did current tax for normal tax, and we are now picking current tax for capital gains and dividends. So let's come back and emphasize again. Our tax expense should include current tax and deferred tax. So in a year of assessment or in a accounting period, an entity can make income from capital assets, either through sale, disposal of an asset like building or land, or revaluation or fair value of investment property. And that income is recognized as other income in the profit and loss or in the other comprehensive income. Now, focus on the capital gains. What is capital gains? Okay, it is a tax that is levied on a capital gain arising from disposal. So that's actual disposal or deemed disposal of a specified asset. What are specified assets? What does it mean to say specified assets? This means immovable properties. We're now going deep now into capital gains, which is land and buildings, and any marketable securities. We're talking to debentures, shares, unit trusts, bonds, and stocks. In 2017, January 2017, the Capital Gains Tax Act added registered intangible assets, or some registered intangible assets, as also specified assets. So let's also then focus quickly and say what are deemed sales. Because it's very important to see a trigger of capital gains tax in a scenario when you are dealing with an entity. So if they do a certain event, that could trigger capital gains tax. So a deemed sale could arise from donation. So when an entity donates a building or dispose by way of other than sale, that's called deemed sale, and we normally measure at the deemed market value. Expropriations: if your land has been taken over by government for national use, that is also a deemed sale, especially where you are compensated. Sold in execution of court order. So quite a lot of properties are foreclosed or taken by court on outstanding obligations. That also is a deemed sale. Maturity or redemption of specified assets. So if a debenture or a loan amount actually matures, or a share is exercised through option, sell through option, through exercising of an option, all that also is deemed and trigger for deemed, or called deemed sale. Transfer under deed of sale. So you're transferring as a deed of sale, and probably exchanging. Who is liable to pay CGT? So it's paid by the seller. So CGT is also a withholding tax, where by the time the buyer normally gets the asset, they should have paid tax. So the seller can actually pay, or a depository, which is a bank, or an agent also can pay. Now, what are the tax rates, or the capital gains tax rates? So the tax rates for capital gains purposes really depends on when an asset has been bought, and this is due to the conversion from Zim dollar in 2009 to US dollar, where some of our assets were under Zim dollar and now are measured under US dollars as of 2009, February 2009. So if you acquired your assets before 1 February 2009, very important date to note, mostly all those assets that were acquired before, if it's immovable property, the capital gains tax was a 5% on proceeds, total proceeds. Unlisted shares, exactly the same, 5% on proceeds, and only listed shares henceforth from 1 August 2009 were 1% on proceeds. Okay, registered intangible assets as of then as well were also having such a percentage if they were there, but for that period they were actually exempt. Any asset that is acquired after 1 February 2009, it would be taxed on the capital gain, but the percentage is now different. The percentage is now different, which is we would calculate our capital gains. Our capital gains being the difference between the proceeds and the base cost. So if you get your proceeds, some of the allowable deductions includes the cost of the specified assets, the cost of additions or alterations, improvements, and inflation allowance, as well as selling cost. Those are deducted. You get your capital gains and you multiply by 20%. That's for immovable properties and unlisted shares and registered intangible property. But for listed shares, it's simply 1% of the proceeds. So when is CGT not payable? Mostly donation of housing units to a local authority, which means this is an approved employee share ownership scheme or community share ownership trust or scheme. These are some of the adjustments that were brought by the Indigenous Nation Act. Now, we need to look at the impact of assessed loss on calculation of capital gains tax. So we agreed that our capital gain, as an example, is a difference between the proceeds, which is the amount received for sale, less all these costs, which is the purchase cost of that asset, inflation allowance for 5% of the purchase cost, cost of alterations or improvements, and selling cost. When you get that, you get your taxable capital gain. But if you made a capital loss in the past, you're allowed to deduct that capital loss which you have brought forward to come to your capital gain or accumulated assessed capital loss. Then your current tax would be your taxable capital income times your tax rate. So the impact of assessed loss is that it should be brought forward and be deducted. Okay? And current tax is not recognized if there is an accumulated assessed loss as far as capital gains are concerned. So if you now focus on the capital gains, we've been able to call the current tax, and that current tax is calculated on actual disposals of specified assets. So for it to be current, you should have proceeds. You should have deemed proceeds. In other words, the event of sale of disposal has happened. So if you open example 24 in the module, we have a number of assets, some that are sold, some that are not. So to calculate our current tax, we are only focusing on assets that have been actually sold, e.g. the office building sold at fair value, and fair value of the profit, fair value through profit and loss investment, where half of it has been sold. So we have on that half. That's the only assets or specified assets that are going to affect our current tax capital gains. If there's any question, it would be appropriate to bring it to class, meet your tutor, or ask your friends. Other taxes on companies include the dividend tax. It is very important to note that dividend withholding tax or any withholding tax will only be part of income tax if it is if the amount, the net amount, is not taxable again. So our dividend tax it's very important to note that the person who has been taxed is the receiver of the dividend. Whilst the tax may be paid as a withholding tax by the payer, the entity that is paying the dividend, that is only a process of administration. So it's paid at the source by the declaring entity on behalf of the receiver. The receiver should create a tax expense if the dividend is included as taxable. Local dividends paid are exempt, okay, from especially local dividends paid received by a company, two from a listed company are exempt, and foreign dividends are taxed at 20%. Let's take a quick example. On the 25th of March, an entity, a wholly owned foreign subsidiary, B Limited, declares a dividend of 100,000 to its parent. In terms of the local tax legislation, A Limited is required to withhold a dividend tax of 20%. The dividend tax was paid by A Limited on 4 April. So if you look at this position, let's take the entity, which is the subsidiary. So the subsidiary recognizes a dividend paid of 100,000 and credits bank the amount that is paying immediately is 80,000. The difference is allocated as a payable to Zimra, which is 20%. So which means the parent company only receives 80, the other is received by Zimra. So it's paid at source. On 4th of April, when the tax is paid, the subsidiary pays Zimra 20,000 and derecognizes the liability to Zimra of 20,000. What's interesting is when you look at the parent company, the receiver, it recognizes dividend income of 100,000, but it actually received 80,000. The other difference of 20,000 is recognized as tax expense. So that's how dividend withholding tax works, as well as the capital gains. If there's any question with regards to this, please bring it to class as well. Talk to your friends and your tutors. I thank you. It has been a pleasure.